Going on, everybody? Welcome in, welcome in. Let me just do the rounds, let everybody know that we are live. And then we will get started in a couple of seconds. Hope everyone had a good weekend. Hope everybody's feeling recharged going into this holiday weekend. What's up, Samaj? What's up, Gerodric? Hope I said it right, Gerodric. All right. So let's go ahead and get into this after I take the sip. All right. So I'm going to be honest with you guys. We have a short week. Thanksgiving is obviously on Thursday. I think the market has a half day on Friday. So there's not really going to be too many like economic prints or anything coming out. It looks like, nothing really too important on Monday. And then on Tuesday, we do have some home sales. Oh, we have the FOMC minutes. That'll be interesting. That's at 2 p.m. Eastern time on Tuesday. And then on Wednesday, we have jobless claims at 8:30 in the morning. Consumer sentiment, not as important as the jobless claims, but still important. That's at 10 a.m., half an hour after the market opens. And then 10:30, we have the petroleum status report that can often cause a move as well. And then Friday, we have PMI, but again, not like super important, which is why it doesn't have like a solid red star around it. So yeah, again, like I said, this week is going to be pretty quiet. And as you can see on the chart, we'll also see that the market is kind of just range bound right now. We haven't really made too many moves since we've seen this large rally over the past couple of weeks. And I think partially, or like a partial reason for that is because we're heading into this like kind of holiday week and nobody wants to really put any risk on the table. People are starting to take, some time off, all of those kind of things. So with that being said, let's go ahead and switch over to think or swim. Hide this. All right. Let me do something real quick. All right, cool. All right, so as you can see here, we have the S&P 500 chart up. I like to always start on this chart. And first things first, again, as you can see, we are kind of trading in this balanced range for the past 1, 2, 3, 4 days. I have marked the upper balance right here, and then the lower balance right here. So on the lower side, we have the 4,500 level, a nice psychological level. So obviously, it's going to be natural for people to want to buy here. And as you can see, we have this lower wick. Once price made its way back down here on the back test. On the flip side, we had these pretty much relatively equal highs up here at 45.41 and a quarter. So price has been trading in a 40-point range for 4 straight days, which for the S&P, that's very tight, right? And that is not what you want, like as a day trader. As a day trader, you typically, you want that volatility, you want those larger moves that you can capitalize on. You can make money in these markets, but usually it's going to lead to a lot of chop. Some people can do well, but I'm not one of those people. I like moves that, have some continuation and direction behind them. When we are in these type of directions, I like to typically short the highs and fade the lows, or I guess fade like both extremes. So if we take a zoom in here, pretty much, for like the past few days, I've been saying like I'm looking to just fade the extremes. So once we put in this defined high up here at 45.41, I've been saying this entire time, like everywhere between like this 45.41 area up here down to this like 45.35 area, which we were rejecting starting on, what was this? I think Wednesday of last week. I was basically looking for shorts here. I even attempted a short here on Friday. The volume was just really low. We didn't really end up getting too much continuation. As you see, we got a little baby sell off here towards the end of the day, but that even then was only like a few points. So I just didn't really see a point of staying in the trade at that point. Um, but yeah, so when we're in conditions like these, as you can see, just kind of bouncing around in between here, up into here, in between here, up into here. These are the situations where, again, when price comes up here, you want to be fading these extremes. It's not going to be perfect, right? We might end up seeing a situation like this where price comes up into it, right? Maybe we break above the previous high by a few points, and then price reverts back into it. To grab some liquidity, catch some people off guard, trap them before we make our way back into the range. But those are typically the setups that I like looking for, and then vice versa. As price comes down into here, this lower 4,500 area, same thing, right? Price might pull back down into here, trap some folks below the low, make people think, oh, we're about to fall below 4,500. Let's get in puts, blah, blah, blah. And then you know how the story goes. Get a nice bounce back up into the range to the upside. So those are the typical setups that I personally like to look at when we're in these balanced conditions. And an easy way that I like to kind of identify these conditions is by going to the daily chart, right? So let's see if we can zoom in here. All right, cool. Let's make it a little bit bigger for you guys. All right. So on the daily chart, you can see that phenomenon that I've been talking about much more clearly, right? And an easy way to identify this is by looking at the previous day's candle, and specifically how the previous day, how the current day candle relates to the previous day candle. So let's take this session so far that just opened tonight. We're opening this candle here inside of the entire body of the previous candle over here, right? So that's immediately a red flag, right? You don't want to have price trading in that same kind of area because it's getting tighter and tighter. That means that the moves are going to be smaller and smaller, which means that you're going to be much more prone to fake outs. On the contrary, the price action that you do like to see is when price has chosen a direction that's very decisive. Now, obviously, these like candles over here, they're very, I guess, like kind of like extreme examples, but the concept still applies. You want to see candles where they're trading majority outside of the previous day candle. So as you can see here, this entire body pretty much is outside of this previous day candle. And then even this smaller candle right here, it's trading above the previous day. So if we're trading kind of in this area, I wouldn't really be too interested. But once we actually break above this previous day high over here, now that means, okay, the market has decided kind of what direction it wants to head, which in this case would be the upside. And then that's where I'll be looking for taking longs in this case. But again, this isn't like the best example. This is a pretty small candle, kind of formed a doji, but especially like in situations like this that we have here, this is ideally what you want to look for. The move might not necessarily be this big, but the point is you want the current day candle to be either above the previous day's range or below the previous day's range. Like you can even see something like this, right? These would be beautiful days to be trading on, right? Previous day's range is right here. This entire candle's body is outside of that. Same thing here. Entire candle's body outside, entire candle's body outside. And we come over here, entire candle's body outside of this one. right? So on and so forth. So these are just like easy ways for you to kind of identify like, okay, identify like, all right, are we going to be like range bound in the market, or are we going to actually have a day of continuation where we can actually get some good setups? Again, this is all subjective. Some people like, the range bound, they think that's predictable. It's easy to just kind of identify the highs and lows and then fade those extremes. But me personally, the way I trade and the setups that make me the most money, it doesn't really work out the best for me personally. All right. So now let's drop a little bit lower and actually get into some setups that I am going to be watching on the S&P 500, and then we can kind of go over and cover the NASDAQ pretty briefly. And this time the NASDAQ is in a little bit of a different situation, which we'll talk about when we get there. So it won't be quite the same thing that we're talking about on the S&P. All right, so first things first, like I said, I am going to be looking for really just two main scenarios this week. Again, we have a shorter week with the holiday and then the half day on Friday. So I don't expect like too much movement. So my first priority and my first kind of setups that I'm going to be looking for again is fading those extremes, right? So if we um, if we can come in here and draw our scenarios. So the first scenario, again, that I'm looking for is for us to kind of trade up into this range, preferably more aggressively, right? We at least hopefully can get some volume, maybe not a strong breakout or any continuation like that, but if we can at least get some decent volume up here into this upper range, preferably above this previous high of 45.41 right here, then I'm definitely first going to be looking for sellers to step in here and push us back down after we take out some liquidity up here at these 45.41 highs, right? So I'm looking for a slight breakup out of this balance range for us to come back into it or move back down into around 45.20. That's usually where we've ended up finding some nice like intraday support / resistance. So kind of right here, support right here, support right here. So this general area is kind of where I would be looking for to take profits. And the other thing about these conditions is that because it's so range bound, like if you, let me clean up this chart. So if we just kind of look on the day-to-day basis. Another thing that I don't like about this, again, is there's not really too much direction. So let's say like you wanted to take a trade at some random arbitrary spot, let's say right here at this candle, right? What are the odds of this working out? We're just kind of like in the middle of the range. It could go up or it could go down. And obviously that's an obvious statement. We're talking about the stock market. Of course, those are the only two scenarios. I guess if it stays the same too, but usually it's going to be up or down. So that's obvious. But like there's certain areas on the chart that have higher probabilities of there being like a direction of move, right? And that's kind of the whole premise of us trading these ranges. Like when price comes down here to these extremes, or vice versa to the upper balance, like when we're in these types of conditions, there's a higher likelihood that we're going to end up reversing and going back to the upside. So it doesn't make any sense for me to take a trade just kind of what I like to call no man's land. Like there's not really anything can happen in here. This is the wild, wild west. So why would you want to take trades in this area? Like trading is already hard enough. So there's no need to make it harder on yourself by taking lower probability setups. So typically you want to wait for something. In this case, when we're talking about these balance conditions, you want to wait for either extreme. And it's not guaranteed that if price comes down into here, that it's going to reverse. We might get something like this, where price comes down into here, right? Price comes down into this, and then maybe we'll continue down, right? We get like an actual breakdown. And then in this case, Now what I would be looking for is a retest for this to hold, and then for us to get that continuation down lower, right? That's also a scenario too, which I'm going to segue into in a second. But yeah, like I said, to sum all of this up, my first priority and the first thing that I'm going to be watching for is for us to fade either of these highs, because that's just kind of how the stock market works. Until your thesis is proven incorrect, I'm going to keep assuming that the same reaction is going to give a similar result. So if we come up here and we look like we're rejecting, I'm going to assume that we're going to reject up here at these highs, and I'm going to take it short. And if I'm wrong, that's okay. That's why we manage our risk. Same thing down here. We sell off into this area. I'm going to be looking to fade these lows and take the market long. Again, if I'm wrong, that's why my risk is managed, and we'll take a small loss on it. Now, on the flip side, again, I think that the odds of us actually getting continuation this week will be low. I do think that we're going to trade in this balance range just because, again, it's a shorter week. It's a holiday. People aren't going to, be like trading like that on Wall Street, or really just like us retail traders in general. A lot of people are going to be taking this week off. So it's going to be lower volume. So the odds of us breaking out of this range is going to be lower. I do think that the breakout, whichever direction, is going to happen next week. But just in case it does happen this week, we have to be prepared for it, right? So let me zoom out here. Boom, there we go. All right. So in the event of an actual breakout to the upside, here's what I'm looking for. It's probably obvious at this point. I am going to be eyeing this 45.60 supply zone up here as a good place to take profits at, right? But again, because of the fact that we've been trading in this range, I'm going to need that confirmation. So for me personally, I would want to see something like this: a strong break to the upside like this, for us to pull back, support these previous highs, which was kind of serving as resistance, right? We might not hit it perfectly. We might, break a little bit below, consolidate for a little bit, and then get a move higher. Um, and then get a move higher afterwards, right? So something like this, pull back, maybe consolidate for a little bit, and then ultimately move up into supply. This is a scenario that I will be watching, right? And obviously, this is the bullish case. I hope this makes sense to everybody. So again, the other flip side of the coin is we've been trading in this balance, but on the off chance that we break out this week, since this is the weekly analysis for this week, if somehow we end up breaking out, this is going to be what I'm looking for. I am definitely not going to be looking for something like this, where we just rally straight up, and then as soon as we cross this upper like kind of upper balance, upper range, I am not going to be looking for, as soon as we cross this, getting in longs and assuming that we're going to get this continuation, especially because of the fact that we haven't been getting continuation this entire week. We've had lower volume and it's a holiday week. So the odds of this, like a pure breakout, at least me taking it, I'm not going to be doing that because the odds are low. Same thing to the downside. If we come down here, we sell off, I'm not going to be immediately, as soon as we break below 4,500, I'm not going to be like, all right, I'm looking for shorts here. Like, I need to see us come down, have a meaningful move of continuation. I need to see that bears are serious. I need to see us defend this same general area, right? This is the general area, this 4,500-ish range. I need to see bears defend it on a pullback, and then give us some continuation into this demand zone, and then after that, much lower if the selling is aggressive enough. So this down here is our bearish scenario. If we do somehow end up getting this breakout, right? Does that make sense? I hope so. All right. So I think that kind of sums up the scenarios for the S&P really. Not too much to talk about. Again, we have that shorter week. We have also been trading in the range. So there's not really too many things to talk about here. So now, as promised, let's head over to the NASDAQ. Because we do have a little bit different of a scenario situation here. The NASDAQ has been range bound, very similar as the S&P, right? We have this upper balance range inside of supply. And then on the flip side, we have this lower balance with this 30-minute demand here, which has been holding really well. So again, the NASDAQ is also trading in balance. So there's not really too much to talk about with that. It's pretty intuitive, just like everything I said about the S&P pretty much, but apply it to this. But the difference with the NASDAQ is the fact that, there we go. Let's see here. All right. The difference with the NASDAQ is this picture right here. We're almost to all-time highs. We are about, what would that be? We're about 400 points away from all-time highs. We're definitely not going to get there in a day, but in the next like coming week, maybe definitely, or not definitely, most likely not this week, but in the next like 2 to 3 weeks, there's a very high chance that the NASDAQ will end up making its way up here and testing these 2023 highs at 16,250, right? Specifically because in this range here, if you remember kind of coming from our live stream on Wednesday, we kind of talked about those air pockets of volume, right? Those air pockets of volume where there's not too much activity being traded. And because of that, it's very easy for price to move through those areas. We can demonstrate that again really quickly right here. As you can see, I don't know how long ago this was. This was about a couple months ago, back in September. We had a very aggressive move right here in this range, straight move down, as we can see, right? Not too many shares traded, or not shares, not too many like lots traded, not too much volume. We just moved straight down. So guess what ended up happening when we tested this area again, right? We came back up. Oops. We came back up into this range right here. Of course, we needed that CPI catalyst ultimately, but at the end of the day, look how easy it was for us to move back up into this area right here. After we moved down so quickly, it was very easy for us to move up very quickly when we came back into this, right? So the same thing most likely will apply on this area right here. We had a very quick move. Let me zoom in for you guys. We had a very quick move to the downside. It was very aggressive, right? So once we end up invalidating this supply zone right here, this is where it originated. Once we end up invalidating this area, there's a high likelihood that price is just going to end up acting like a magnet and moving straight up into this 2023 high of 16,250. So that's definitely a setup that I'm going to be watching for. Again, will it happen this week? It's possible, very unlikely, but it is something to be prepared for just in case somehow price moves up into that range. So just like we described on the S&P, right? We're still in that balanced range. So what I personally am going to be looking for is not just a breakout, smooth up into here, getting in calls as soon as we invalidate the supply zone. No. Instead, what I need to see is for us to move up into this range, maybe consolidate for a little bit, do whatever needs to happen, and then once bulls prove that we have acceptance of price at higher prices, that is what I'm going to be looking for. On top of this, this area is a little bit different as well, because if you take a look at kind of where price is right now, we're at a psychological like $1,000 level on the Nasdaq, right? 16,000 even. So there's going to be a lot of like just activity around this area. A lot of algos are going to be tied to it. A lot of just regular human eyes, retail traders are going to be looking at this level. Oh shit, um, the Nasdaq or QQQ is at 16,000. So everybody getting calls, right? But as you can see, literally just 1, 2, 3 days ago, price came up into this, and that exact phenomenon happened. We broke out above 16,000. Guess what? You see the upper wick. People got trapped. Price moved right back down below that, right? So why would it make sense for me to attempt a similar setup in the coming days, right? I need to see us move up into it, either consolidate or just a smooth breakout above, pull back, hold this $16,000 level, right? Hold on the retest, and then for a move into that 2023 high. And just how price got faded at the $16,000 level, this is a good area to take profits, right? You don't want to be buying once we get up here to these highs and thinking, oh, like we're going to break out. Like this is it. We're going to the moon. No, me personally, I like to sell into strength. I want to sell when everyone else is buying. That is a recipe for disaster if you're on the other side of the equation, where there is a lot of people kind of what I like to think of as like obvious levels, right? If most traders lose money and most traders are looking at that area, then why would I want to like get in with them? Because most likely they're going to lose. Like I want to be the one selling to them up there, not the other way around. So this personally for me is going to be a profit taking area, not an area to be entering a long position. On the flip side, if we do happen to again break out somehow this week, what am I going to be looking for to the downside on the NASDAQ? Of course, I want to see us invalidate this demand zone down here, pretty much the opposite of what I was saying for the upside. I want to see us invalidate this demand zone, hold on a relief bounce up into this area, and then give us some continuation down here into this next demand zone. And this is the origin of that CPI print that we got last either Tuesday or Wednesday of last week, whichever day that was. That is kind of the scenario that I'm going to be looking for. Not sure if we're going to get it this week. We do have some economic news, but honestly, yeah, I think it's just going to be a pretty quiet week this week. So a lot of these setups most likely will be coming up and will be ripe for next week for us to take advantage of. But if they do come this week, we're going to be prepared, right? We're going to be prepared. We're going to be disciplined. We're going to be waiting for them. We've gone over them. So if they show up, we're going to execute as a team. All right, folks. Yeah, I would say that's pretty much it. We went over the S&P 500. We went over the NASDAQ. Unless anybody has any quick requests or any questions, we can get on out of here and prepare for the week ahead. All right. Gonna give about 15 more seconds. If no one has anything, then we out. Appreciate it. Appreciate everybody for tuning in. I know it's, depending on where you live, could be a little bit late, but hey, those are the sacrifices we make to extract the money out of the markets, right? Can't just be doing the bare minimum. Got to study, got to be prepared. This is trading is a business. It's a professional thing. So got to take it seriously. If that means doing some work on a Sunday night like this, so be it. But all right, cool. Looks like we're all good. Happy early Thanksgiving to everybody. Hope you all get some good quality family time with your loved ones, recharge. I'm not going to be active tomorrow. I'm going to be traveling. Hey, mom. I'm going to be traveling home. So I will see you guys on Tuesday. I don't know if I'll trade on Tuesday. Again, if one of these setups presents itself, then I'll take it. Otherwise, it might just be a week that I have no trades. We'll see. But anyways, till next time, folks, I will see you in the next episode.